Salary income computation. Under section 15 to 17 of the Income Tax Act 1961 provides the following provisions. Salary means a monetary and a non-monetary benefit received by an employee from their employer. Monetary means benefit received in the form of cash or equivalent, such as basic pay, allowances, bonus, etc. Non-monetary means house quarters, the service of servants like a cook, gardener, sweeper, watchman, etc. For the practical problems, the computation of taxable salary provides the following features. Salary consists of basic pay plus allowances plus perquisite plus profit in lieu of salary and termed as gross salary. Allowances may be fully taxable or partly taxable or fully exempted. Perquisite means additional package of monetary or non-monetary benefit provided by employer to employee for the appreciation of their services. Profit in lieu of salary means employer contributions to recognized provident fund and the interest credited thereon. Standard deduction under section 16(1) is applicable to all employees up to Rs 50,000 per annum. If any professional tax paid by employee to the local authority is permitted to deduct under section 16 subsection 3 of the IT Act. Now let me see the computation of taxable salary format while on service. Basic part, it consists of basic pay and dearness pay. Dearness pay means a dearness allowance which is enters for computing retirement benefits is called DP, dearness pay. Next, bonus and commission on sales or commission on profit, leave salary, arrears of salary or arrears of bonus, or advance salary or advance bonus. These are all covered under basic part. It is the first part of the salary. And the second one is allowances part. It covered three. Number one, fully taxable allowances. The following allowances were fully taxable in the hands of employee. Number one is dearness allowance. Next, entertainment allowance. Next, city compensatory allowance, project allowance, family allowance, lunch or tiffin allowance, overtime allowance, fixed medical allowances, wardenship allowances, other special allowances. These are fully taxable allowances in the hands of employee. And the second, part B, partly exempted allowances. Under this, the important one is house rent allowance. For if any rent paid by an employee out of house rent allowances received from their employer, that employee can claim exemption under section 1013A. First one is rent paid minus 10% of salary. Here salary means basic pay plus dearness pay plus fixed percentage of commission on sales or actual house rent allowance received. And third one, 40% of salary. Here one loop is there, 50% in case of metro city. Out of these three exemptions, which one is least was exempted from the actual allowances, balance only taxable. Next, children education allowance. Less exemption under section 1014. Only for house rent allowance we can avail exemption under section 1013A in the salary. For all other allowances we can claim the exemption only under section 10 subsection 14. Now children education allowance, actual allowance less exemption under section 1014, 100 per month per child, maximum 2 child allowed, balance taxable. Children hostel allowance, less exemption under section 1014, 300 per month per child, maximum 2 child was allowed, was exempted, balance only taxable. And the tribal area allowance, it was exempted up to rupees 200 per month, balance was taxable. Transport allowance, less exemption under section 1014 for physically challenged or blind assessees, up to 3,200 per month exempted, balance taxable. Special allowances in transport system, those persons who are working in the goods train or ship or long duration transports. Less exemption under section 1014, 10,000 per month or 70% of such allowance is exempted, balance only taxable. Island allowances, less exemption under section 1014, rupees 3,250 per month exempted, balance only taxable. Conveyance allowance. In this allowance, actually spent was exempted under section 1014, balance taxable. Hill compensatory allowance, less exemption under section 1014, 300 per month was exempted, balance taxable. Now, fully exempted allowance. Uniform allowance, academic allowance, daily allowance. These three allowances were fully exempted under section 1014. And allowances to Supreme Court judges, ambassadors, UNO members were 100% exempted from income tax. And the third component is perquisite or PEX. Actually, separate annexure to be inserted in later, because the salary is a very vast chapter. First of all, we are going to govern only the basic part, allowances part, and the fourth one is profit in lieu of salary. That means pills. Under pills, actually, we are going to study about only the employer contribution to recognized provident fund and interest accrued on RPF. So, pills means it is an additional monetary contribution provided by employer in the form of contribution to recognized provident fund. Here, less exemption under section 1012. Up to 12% of salary was exempted, banksly taxable. Here, salary means basic pay plus DNS pay plus fixed percentage of commission on sales. The same salary be computed for HRA also. So, salary means for HRA and RPF the same meaning. Next one, interest accrued on RPF. Here, we can claim exemption up to 9.5% of such interest. So, balance only taxable. So, by adding the taxable basic part plus taxable allowances part plus the taxable profit in lieu of salary, we will get gross salary. After arriving gross salary, we can go for standard deduction under section 16(1). It is available for all individual salaried employees. 50,000 is the maximum limit. And second one, less entertainment allowance exemption under section 16(2). Actually, this exemption applicable only for government employees. Three options are there for exemptions. Number one, 5,000, it's a maximum ceiling. Number two, 1/5 basic pay plus DNS pay. Number three, actual entertainment allowance. Out of these three, which one is least was exempted, qualifying amount for deduction under section 16(2). Last one, if any professional tax paid by employer, that amount is allowed to deduct under section 16(3). So after arriving the gross salary, we can deduct 16(1), 16(2), 16(3). So the balance is a taxable salary. Here, one simple problems under salary. I like to take one practicism. From the following details, compute taxable salary for the accounting year 21-22. Net salary received 3,60,000. Tax deducted at source on salary 30,000. Own contribution to RPF 18,000. DNS allowance 6,000. Only 4 informations are there. How to compute the taxable salary? Let me see. Here, net salary means it is a take-home salary. For income tax, under income tax salary computations, we have to consider the gross salary. Gross salary means the take-home salary plus all the deductions from his salary. So here, basic pay means net salary plus tax deducted at source on salary plus own contribution to RPF. By adding these three, so 360 plus 60,000 plus 18,000, totally 4,08,000 will be the basic pay. Under DNS allowance, only 6,000 per month into 12, 72,000. So the total gross salary will be 4,80,000. And we can get deduction under section 16(1), standard deduction under section 16(1), 50,000. It is a fixed amount for all employees. So balance 4,30,000 is a taxable salary. The same pattern, everyone can do practice exercise 1. Now I wish to take practice 2. Mr. John joined an organization on 1/10/2018 at the grade pay of rupees 26,000, 2000, 36,000, 3,000, 41,000. It is called scale of pay or grade pay. Mr. John actually he was joined on 1st October 2018. So his salary from 1st October 2018 to 30th September 2019 salary will be 26,000. And hyphen 2000 means this 2000 stands for annual increment till the basic salary reaches 36,000. After 36,000, the salary will be revised. Hyphen 3,000 means it is another pay scale. So his annual increment will be 3,000. In this problem, Mr. John joined an organization on 1/10/2018 at the grade pay of rupees 26,000, 2,000, 36,000, 3,000, 41,000. Compute his basic pay for the previous year. Salary is payable on every 31st day of the same month. He also received dearness allowance at 30% on pay. When the dearness allowance is given on certain percentage on the basic means, it will be treated as a dearness pay. It is not DA. Compute taxable salary. Now we have to enter into the int. Basic pay from 1st October 2018 will be 26,000. From 1st October 2019 will be 28,000 because it's an incremental salary. From 1st October 2020 it will be 30,000. From 1st October 21 basic pay will be 32,000. In the accounting year, 1st April to 30th September is entitled to 30,000 per month. That means April, May, June, July, August and September, 6 months salary. So actually the salary is payable on every 31st day of the same month. From October month onwards, you will get the incremental salary. Basic pay will be 32,000, being salary received last day of the same month. So how to compute the taxable salary? Let's go for the answer. Basic pay 30,000 into 6 months plus 32,000 into 6 months. And dearness pay will be 30% on this 3,72,000. So the gross salary will be 4,83,600, and we can avail standard deduction under section 16(1) 50,000. So balance taxable salary will be 4,33,600. The same pattern exercise 2 was given for your references. Now practice 3. Mr. Moran joined an organization on 1/10/2018 at the grade pay of rupees 14,000, 2,000, 24,000, 3,000 and 13,000. It's a grade pay. Compute his basic pay for the previous year 21-22. Salary is payable on every first day of the next month. In the previous problem, salary was paid on the month itself. But in this problem, salary is paid on the first day of the next month. So we should be very aware while computing basic pay in these situations. He also received a D at 40% on basic pay. Compute taxable salary. Basic pay from 1st October 2018 is 14,000. From 1st October 2019 will be incremental salary 14 plus increment to 2,000, totally 16,000. From 1st October 2020 his salary will be 18,000. From 1st October 21 his salary will be 20,000. Every year he is getting increment of rupees 2,000. So in the accounting year, 1st April, 1st May, 1st June, 1st July, 1st August, 1st September and 1st October. Because on October 1 he may receive September month salary. It is not an incremental salary, it's an old salary. So he is entitled to 18,000 per month, old salary for 7 months. From November 1 onwards, basic pay will be 20,000 because October month salary is incremental salary. That October month salary he may receive only on 1st November. So while computing the basic pay will be 18,000 into 7 months plus 20,000 into 5 months. It will be accounted 2,26,000. And we have to compute the dearness allowance, 2,26,000 into 40%. It was given in the problem itself. So the gross salary will be 3,16,400. Less we can avail standard deduction under section 16(1). maximum rupees 50,000. So balance 2,66,400 is a taxable salary. In the same pattern, everyone can do exercise 3. Now, simple exercises and practices under the basic part plus allowances part. First, practice 1. Compute taxable salary of Mr. Vinayak for the assessment year 22-23. Basic pay 20,000 per month. Transport allowance 3,000 per month. Academic research allowance he received 5,000 per month but actually spent rupees 50,000 totally. Children education allowance 500 per month. Children hostel allowance 800 per month. He got 2 children studying in the school and staying in the hostel. How to compute the taxable salary of Mr. Vinayak? Let me see. Basic pay 20,000 to 12, 2,40,000. Transport allowance 3,000 into 12, fully taxable. Actually, we can claim exemption under section 1014 under transport allowance only for the physically challenged and blind. But for the general cases, no exemption. Actual transport allowance was fully taxable. Next one is academic research allowance. He received 60,000 per month. Out of 60, he spent rupees 50,000. The actual amount spent, we can claim exemption under section 1014. So balance 10,000 was taxable. Next, children education allowance. He got 2 children studying in the school and staying in the hostel. For children education allowance, we can claim 100 per month. Maximum 2 child, we can claim exemption. So out of actual allowance 6,000, we can claim 2,400 as exemption. Balance of 3,600 was taxable children education allowance. Next, children hostel allowance. Actual allowance was 800 per month into 12, 9,600. Less exemption under section 1014. For children hostel allowance, we can claim exemption of 300 per month per child. Maximum exemption is limited to 2 children. So 300 into 12 into 2 child, that means 7,200 we can claim exemption. Actual 9,600 exemption, 7,200 balance 2,400 was taxable. So the gross salary will be 2,92,000. Less the standard deduction under section 16(1), 50,000. Less entertainment allowance. Actually, this allowance is applicable only for the government employees. So in this problem, Mr. Vinayak cannot avail. So not applicable. And less professional tax under section 16(3). So for all the salary problems, we can claim deduction 16(1), 16(2), 16(3) if it is appropriate. So balance the taxable salary is 2,42,000. In the same pattern, exercise 1, everyone can practice it. Now I am going to practice 2. From the following details, compute taxable salary for the accounting year 21-22. Net salary received 3 lakh. Tax deducted at source on salary 30,000. Own contribution to RPF 12,000. So by adding all these things, we will get the basic pay. And the DNS allowance 6,000 per month. It is only the DNS allowance only. No information about whether this DNS allowance is forming part of basic or computing for the retirement benefits. No information. So it is simply we have to treat as a DA only. It is not DP. Next, entertainment allowance 2,000 per month. Academic research allowance 25,000 per annum. Uniform allowance 12,000 per annum. How to compute taxable salary? Let me go for the solution. Basic pay will be by adding take home salary, that means a net salary 3 lakh plus a TDS 30,000 plus own contribution to RPF 12,000, totally 3,42,000. DNS allowance is 6,000 to 12, 72,000. Entertainment allowance is 2,000 to 12, 24,000. Academic research allowance, it was in the previous problem the actual amount spent was given, that amount was deducted, but in this problem no actual amount spent was given. So the full academic research allowance we can claim exemption under section 1014, but as the taxable part will be 0. Next, uniform allowance. Actually academic research allowance, uniform allowance and daily allowance were fully exempted under section 10 subsection 14. So the gross salary will be 4,38,000. Less the standard deduction under section 16(1), 50,000. Balance 3,88,000 is the taxable salary. In the same pattern, everyone can practice exercise 2. for your easy references. Okay, now we'll see in the next video house rent allowance based simple problems. Okay, bye.